Hi everyone, let's go through my preferred low time frame and new micro scenario in this video, starting with the low time frame scenario where the high of wave 5 is already in and we are currently at the beginning of a corrective structure to the downside. The beginning of then this corrective structure is in this case a WXY scenario where we had a zigzag in W, an expanded flat in wave X, and then a three-wave structure over here in wave Y, with the most common target of wave Y being between the 1 and the 1.236, taken from the high of 5 to the low of W to the high of wave X with the trend-based fib extension tool. We also very closely had a target box over here which has not been hit. Price just missed out on hitting the target box. However, it did hit the target area for wave Y, so that is the only thing you kind of need in Elliott Waves, right? It needs to hit the target area. However, it's not that nice that we missed out on hitting it. So if price goes to the downside, I would like to see a bounce over here. However, price moved to the upside quite high already, so I'm not sure if I would like price to go all the way down here after seeing the move that we had over the past couple of hours. Now in this particular scenario, these three waves, the WXY, is only the beginning of the corrective structure. As these three waves are together an A wave, I would then be looking for a B wave to the upside over here, which then creates an expanded flat scenario where eventually this B wave, with the most common target being the 1.236 and the 1.38 between 29.6k and basically 30k, you would then expect a move to the downside in an impulsive structure for then a wave C, creating an expanding flat. So we then have an A, B, C. The reason I would like price to go up for a wave B and take the high of 5 is twofold. First of all, we have some confluences over here that I would really like to be hit, basically the weekly naked point of control, and we have a weekly over here as well. And what it also will do is people are gonna maybe think, hey, we're gonna continue our way to the upside. However, a wave B expanding flat high is as it's also called, a fake high. So it's not part of an impulsive structure, it's a corrective structure. So people might think, hey, we would continue our way to the upside, but instead it's a wave B expanding flat and we're actually gonna go the opposite way all the way to the downside. So the potential trading setups over here, first of all, the long, as mentioned already in many previous videos by now, laddering the longs in this area, stop loss below these lows over here, trading it to the upside. The main reason also that one does not want to see these lows broken is because there's not much support to the downside. So below these lows, if price would go below these lows, then in my opinion price will go to at least 24,850, where we have the other target box down here, which is also actually one of the targets of this trading setup over here for this expanding flat wave B, where the long setup target would then be the wave B expanding flat target. Of course, it will depend on how price moves to the upside. However, as it stands now, this is looking nice, and with the long setup, one could think, okay, stop loss break even, I'm already nicely in profit, all good, all fine. And then for this wave B, the potential trading setup Elliott Waves, based on Elliott Waves, of course, no financial advice, it's truly educational, guys, is laddering the shorts in this area, stop loss safely above for then an impulsive wave C to the downside. The 1.618 is a rare target for wave B expanding flat, so that is why the stop loss is above this area over here, and then eventually, of course, a move to the downside. Now, two comments that are interesting that you see on my chart. First of all, this short scenario is invalid if this move goes up and up and up in an impulsive structure. If price is not creating a three-wave structure for wave B, this is not a valid trade scenario, because a wave B is just like wave A, a three-wave structure. You want to see a nice three-wave structure in a wave B, and then this scenario becomes valid. But if price is just going to push to the upside in a very impulsive manner, this short setup over here is not valid. The second thing is that we have news today. And if I do this over here, you can see actually also on Friday, as you can see over here, we also got some news coming, and news equals volatility. So today, Central East European time, we got news at 4 p.m. And if I open the news calendar, basically, you can see that at 4 p.m. we have this red flag over here. So that is a high impact news item, basically, which can create volatility. So around these times, you really have to be safe with your trading and make sure to not get caught out, because volatility can kick in and it can be very, very easy to lose trades during volatile times. Now, if you then go to the micro scenario and actually look, okay, so we have wave Y ending over here. So wave A is ended and we're now looking for eventually this blue B for an expanding flat to the upside. How can we structure this beginning of this potential wave B to the upside to hit these confluences here at the top? So currently what I am looking for on the very low time frame is that potentially this was already the first little structure, which is then a wave A. So over here we then have a 5 wave structure in a W, so a zigzag X, and then eventually another zigzag over here. Now this zigzag is not that nice because it reached the rare target for a zigzag, which is the 1.618, with the most common target being the 1 to the 1.236, which is a little bit lower. However, for a wave Y, the common target for a wave Y is the 0.618 pulled from the low over here to the high of W to the low of X. And then one of the common targets is the 0.618. But I think what is important to note as well is if I show you the other targets for wave Y, the other common targets that is, you can see the 1 and the 1.236, which are also common targets for wave Y, also have confluence with this high over here. So if price is moving to the upside, I would definitely pay attention at what price is going to do when it takes the high over here. Is it going to like create a swing failure pattern, go up, down, close below, and then move down? Or are we going to continue? That is yet to be seen because we do not know, but it is definitely something to at least keep our eye on. So if you then look over here, we have the WXY, right? Now it's not the cleanest WXY, but this then would be part of a first structure, which is then a wave A, followed by a B or X, because this is a 3-wave structure, and then wave B as well as a wave X is a 3-wave structure. The only difference is how deep is it going to retrace to the downside, because if this is going to be an A, B, C, it needs to retrace at least 90% of this move, and in a WXY, it can retrace a lot less steep, basically. So we have to wait and see. And also, if we look at the lower time frames, price is creating, as you might be able to see, some bearish divergences. We have this high over here. Let's go to the 5-minute actually. So we have this high that we made earlier today, and we now create lower highs over here. But as you can clearly see, both of the CVD lines are making higher highs. So the yellow line makes higher highs, and the blue line, actually the blue line did not yet, at least not on the 15 or on the 5-minute, and also not yet on the 15-minute. But basically the blue line is very neutral. It doesn't show any divergence, but the yellow line is showing a bearish divergence. I gotta say though, when trading divergences, one would prefer to trade divergences when there is a clear structure in place to the downside. So this is quite a strong move to the downside, and now we have bearish divergences over here. Of course, these are bearish divergences and these can be traded or can be part of your confluence. However, what I prefer to see is a clear structure to the downside, then a move up, then create divergences, which in my opinion are a lot safer, let's say, because divergences like these can be leading divergences sometimes as well, which basically means that price is going to follow the divergence. So eventually we now have bearish divergences, but price is then still going to continue to the upside and invalidate the divergences by taking this high. But hey, we don't know, of course. We have to wait and see what price is going to do. The only thing we can do is have a plan, have an idea of what might happen, and trade accordingly, following our plan, following our strategy, following our entry requirements as well. But if this is indeed the high of a wave Y and therefore the end of potentially a wave A, having bearish divergences might signal that this could be the beginning of maybe a wave B to the downside, like a corrective structure, which would also play very nicely into the like other count that I just showed you, this one over here, where then we could get wave A, B, C, so a nice 3-wave structure eventually, and then we get a 3-wave structure in this wave B for an expanded flat, before then an impulsive C to the downside, which then plays into the hand of this medium time frame scenario over here, where wave 5 is in. So the end of wave 5 is in, and this is then either a wave 1, for then a corrective wave 2 and then a big 3 to the upside, as then this move to the upside is going to be a wave 3 in yellow as well as a wave 3 in green. So you can expect a very, very big move to the upside, or price is going to continue to the downside in the macro and high time frame bearish scenarios that I've shown in the previous video. So check that one out. But this is something that I currently am looking for. The purple that you see over here is a bars pattern from something that happened in the past on the chart. Basically a three-wave structure, another three-wave structure, and then the impulsive structure. So this is an ABC expanding flat, bit of ranging over here before then another move to the downside, which also plays very nicely into the target boxes that I have, finding support, finding resistance, finding support, resistance, and then eventually over here finding support again. But of course, we first have to wait and see what's going to happen locally. Now, the next update is going to be at 7 p.m. Central East European time. I hope this video was helpful or valuable to you, and I'd like to thank you for watching and subscribing, and I see you at the next one. Bye bye.